The holy grail of tax benefit is real estate professional status, otherwise known as reps. In the future, when you hear me say the word reps on our future podcasts, you know what I'm talking about. Real estate professional status, you don't have to be a licensed real estate
Okay.
agent. No, that got
Mm-hmm.
nothing to do with that.
Mm-hmm.
Although people misinterpret as such. All right,
Mm-hmm.
let's take a deep dive. So, what type of risk investors are ideal to apply this reps strategy? Do you know?
Looks like high income earners. Yeah.
Doesn't have to be high income earner, but the ideal strategy to be a high income earner, W two
Right.
or small successful business owners,
Mm-hmm.
people making 100 grand, 150 grand, 300,000, 500,000, even $1 million of W two. It could be doctors, business owners, management people, high level CEOs, people paying highest federal tax rate. I'm not sure exactly the current tax code. I'm a licensed tax advisor, but highest tax rate could be 37% federal tax bracket. Am I right or wrong?
That's correct. Yeah. I
And for
know
those,
about that. Yes.
yeah, for those who live in California and New York State and other high state income tax states,
Mm-hmm.
additional 12%.
At least. Yeah.
So technically speaking, the people that does not look into tax strategies, whether real estate or not, you don't have to buy a whole bunch of income property just to get high tax deduction. You can have
Right.
other businesses. You can get into other passive income business, retail stores or syndications or whatever,
Mm-hmm.
achieve similar high tax benefits, not just income property owners using real estate professional tax status, right?
Correct. Mm-hmm. Correct.
But ideally, because when you're paying a lot of taxes, you need to buy a lot of, several rental properties in order to get the depreciation, in order to get high enough amount of depreciation to offset against the W2 income. Am I right? Active and portfolio income. You have active income, W2 or whatever. If your portfolio income, dividend income, interest income, other IRS, IRA income withdrawals, all those portfolio and active W2 income are part of what the IRS call as active income. So if you
Right.
qualify as a real professional status, you could offset all those huge chunk of cost segregation bonuses or passive losses on your risk portfolio against your active income, and you could potentially reduce your 37% federal tax bracket to 15 or even 10% or even 0%.
Oh, zero is good. We like zero.
Yeah, some people can do it. They really have to digest
Mm-hmm.
the strategy, whether it makes sense for them, right? Not only not that many people qualify for it,
Mm-hmm.
but very few people qualify for it because they are not willing to do the work. The investors are not willing to get educated. They're not willing to, even with proper tax advice from a trusted tax licensed professional,
Mm-hmm.
even they qualify. Some people, you and I know, right? They are too lazy. They don't want to put in the effort. They
Right.
don't want to grind. They don't have commitment. They don't have proper dedication. The whole 9 yards, right?
Yeah. Yeah.
It takes a special
Exactly.
person to go this highest level of tax strategies, which is to become
Mhm.
a quote unquote real estate professional. IRS, believe it or not, they want you to be rich. They are giving you a lot of tax codes
Right.
allow you to benefit from.
Mm-hmm.
Okay.
Mm-hmm.
So the government is on your side.
Right.
Some people may not believe that, but the government, they have these rules and laws and tax regulation that can make you rich. Believe it or not.
Right.
So you have to think like this, but you have to know the rules, right? And don't practice any fraud. Don't do any illegal stuff. Follow the rules and hire a trusted tax advisor, which we have one. We have Keystone CPA within our network. Amanda
Mm-hmm.
Han, which I
Okay.
did a tax podcast yesterday.
Oh, wonderful.
So Amanda Han and her partner, Matt McFarland, CPA from Keystone CPA, they are
Mhm.
our tax partners for our organization, our investment club.
Okay.
Yeah, so we did a very nice tax.
Oh, good. I look forward to seeing that one.
Absolutely. Yeah, have to edit that. Yeah. Okay. Moving forward, this is the final topic we can discuss. I promise. I told you this can be more than 1 hour. It's good. Okay. Okay. Here's a tax code, section 469 of the tax code, risk professional rule, uh, unlimited passive activity uh, uh, allowance, meaning unlimited loss deductions from rental real estate activities allowed to be offset against all other passive income. Okay,
Mhm.
this rule. One
Mhm.
potentially zero out your W-2 income, which is amazing.
That's great.
Now, yeah, the rules, a lot of people, they are confused by it. And even experienced investors, like I told you, even experienced investors are confused by the rules. I don't know. It's just, anyway, I'll do the best to explain this. And other than that, one must hire a licensed tax advisor to go over the unique situations. At the end of the day, to qualify to achieve maximum tax benefit, so you can offset your passive losses, depreciation, cost, seg, bonus depreciation against active income, which is amazing. It'll unleash your tax benefit. But the best way to do it is you're married filing jointly. One spouse
Okay.
alone can qualify. Okay.
Right.
But you have to, the step two is you have to meet this rule. You have to meet
Yes.
150 hours in real property trade or business. This is material participation. So 750 hours equate to 15 hours per week. But if you are by yourself, if you're single, if you have a full-time job working 40 hours or whatever per
Right.
week, you cannot meet this test.
Right. Yeah, it makes
50% of your total work time must be in a real property and trade. But if you already have an existing full-time job, 40 hours or more per week,
Right.
you cannot add another 40 hours to make the 750-hour annual
Right.
hours possible. It's just
Exactly.
so.
It's a
Say it
good
again.
point. Good point.
Julia, I say it again. Whether you're single or married filing jointly, if your non-working spouse or if your part-time spouse are not willing to become a professional, and or if you are single, you're working full-time, making tons of money,
Right.
will not qualify for a professional status because you will not meet this 50% of total work time rule as I
Right.
earlier. Make sense?
Yeah, that does make sense. Totally.
So the ideal situation where one people work, put that part-time or not working spouse to become a real estate investor and do the 750 hours per year, which is around 15 hours per week.
A week. Okay.
Okay. So therefore, if you're single, you might want to marry.
I love it.
When you go out and date someone, if you know whoever you are, whether you're male or female, one of the qualifying criteria for you to date someone is, are you willing to become a professional?
There you go. I'll tell you a lot about their goals for the future. Love it.
Again, it's all about documentation. You have to keep a log, right? Time log and all that. You have to keep a good record because if you get audited, if you have no documentation to document your 15 hours per week or 750 hours per year, then you can lose the tax audit and all the tax benefit you thought you claimed. You have to pay it back to the IRS.
Yeah, they will be looking for it too.
Exactly.
Yes.
But again, some of my tax advisor network, they have a they know how to do this for you, like Keystone CPA, for example, and very few, if any, of their clients who have claim rep status ever get audited.
I love that. Wonderful.
That's right. You got to surround yourself with a trusted team of financial advisors,
Absolutely.
whether it's a tax accountant or asset protection attorneys or your realtors or your mentoring coach, like myself or property managers. All those team members will make you rich over time. So am I right or am I wrong?
Absolutely. For sure.
Yeah. So here's I'm not gonna go over all the details. There are still 7 material participation rules and all that. But at the end of the day, then again, the 750 hours are very stringent, very strict. Is really material participation. Okay. It's not just because you attend a seminar, just because you travel to visit your property, your potential properties, or attend a podcast, those
Right.
hours are not really credible hours. They are not really material participation.
Right.
Material participation rule with respect to rep status, the 750 hours, are mainly you doing all this. You are
Mhm.
directly or involved in all these aspects, meeting, constructing, meeting with engineers, hiring, firing, fixing up your property, scheduling
Right.
inspections, demolishing the property, meeting with salespeople, searching, looking for properties, making offers, arranging for financing, physically doing all those kind of things. Yeah. So, the keeping a documentation using to substantiate your loss, taxpayers, they lose an audit because they lack detailed, contemporaneous documentation log.
Yes.
Here's the end of the day. The people that can benefit mostly from risk professional rep status, the people who have very high income. And yeah, I've talked with people in my network, and I network with a lot of people all over the country for many years now.
Right.
Some tax advisors, they tell me a lot of their clients, they're doing rep status, they make like $500,000 W-2 income, $1 million. And they are doing all this stuff. They are
Wow.
and they're receiving massive amount of tax benefit.
Yes.
Here's the ideal situation, okay? It doesn't apply to anybody, okay? If an investor is too scared to do the rep status, if they don't want to the risk an IRS audit, and they don't have the money, they don't have the money to buy multiple properties to achieve high appreciation loss to offset against the active income, or people simply have a lot of high income, but they are scared to invest in real estate. Those people, they don't do it. They don't qualify. Anyway, so the ideal situation is purchase and scale your real estate portfolio with multiple properties. It doesn't have to be, you don't have to buy 2 or 3 properties at one time.
Right.
Buy one at a time for every few months. If you have
Right.
capital to buy more, do. If you consult your tax advisor, if you feel you qualify to become rep status, in addition to the normal depreciation, in addition to the normal deductions that we talked about, the deducted mortgage interest, taxes, insurance, those are deduction in the mortgage payment you're paying on income property. They are all the deductions against the gross income anyway. So on top of that, you're getting, if you can do a cost segregation on some of your property, not all, and do bonus depreciation, and furthermore, if you can do a short-term rental tax loophole on top of that to buy one or more property under this short-term rental somewhere in the country, if you can do this is the ideal scenario. And for example, the property you should buy, you have higher the value, higher the cash flow in a good market. A fourplex, duplex might work because your cost basis, your depreciation basis is high. You can get more deduction
Right.
out of it. Does it make sense?
That makes a lot of sense. Very good point.
In your situation, you bought some small price properties in the Midwest costing 60, 80 grand. The tax benefit are not that high. Those properties, I don't think one should get a cost segregation and pay a cost segregation company
Oh yeah.
$2,000, $3,000 to do a cost segregation on a low price property, but the net effect of tax benefit is less than the money you pay for the cost segregation study.
Exactly. Good point. Very good point.
Yeah. Again, the ideal portfolio is buy one fourplex in Texas, for example. In Florida, buy another fourplex for 800,000 or whatever. Buy another duplex somewhere in Alabama, or even buy a 6-unit apartment somewhere in the Midwest. That if you have this nice portfolio of properties, is an ideal situation.
Absolutely. Absolutely.
See? Again, the rep status, real estate professional status, unlimited passive losses, offset against active income. So just do the number, right?
That was a lot of information, but it was all very good. And I think the advantage of being able to play it back and watch it is you can absorb the information at your level and what's important to you. So you've given 3 different strategies on way you can benefit passively from the passive tax losses. If you already have property or if you're thinking about property, they're all great strategies to look at and just really, again, run it by your tax advisor.
I'm happy that you're able to digest this information. It's not normal to hear this kind of technical information, but with a little bit of common sense, or anyone could digest it. And
Absolutely.
yeah, tax benefit is just one component of an income property. You and I discussed that numerous times, and we must bring this across every time we present any podcast. And we've been doing that. Again, the recap is this. Tax benefit is one of the at least 4 profit center associated with owning any rental property. That is cash flow, which is passive income increasing over time, and then appreciation, 3 to 5% appreciation over time, 10-year cycle, you will make money on your property. Even though some negative people may not think so, because based on current real estate environment,
Right.
even the current real estate environment on an annual year-over-year basis in the past few years, real estate still continue to increase. Although the crash bros out there, they will say otherwise. For,
Right.
for the purpose of clickbait and monetizing their channel, they are hurting a lot of people, right? A lot of people, they watch the negative news and destroys their brain. They become paralyzed.
Right.
When a human brain become paralyzed because they've been so systematized and their programming of negative information coming to their brain on a daily basis, they're promoted by those misleading crash bros that predict a housing crash every single year for the past 10 years. And every single year they've been wrong. Okay, so stay away from negative programming, those doom and gloom YouTube content creators destroying your financial freedom. If you subscribe to their channels, they will give you permission to do nothing.
Give yourself permission to do something.
Exactly. Julie, as always, you're perfect compliment for our podcast. You provide a lot of value.
Thank
You are a representation of the typical mom and pop investors out there who's trying to make a difference for yourself,
Absolutely.
who are giving the challenges and the volatility of the current housing market. You still continue to stay the course, invest for the long term, collect your cash flow. You don't care about the short term volatility. Term over time, historically speaking, 10-year or more, you will make money with your listed portfolio. So,
Oh, absolutely. For sure. 100%.
yeah. Thank you so much, Julie.
All right. Thank you.
For your time. Thank you so much. Have a nice day, everyone. Oh, by the way, if you see any value from this topic, please like and subscribe and comment on my YouTube channel below, and then subscribe to my email below on my website, and you will become a free member of our real estate investing community. So you receive daily and weekly great free real estate investing content email inbox. Thank you so much for watching. To see you with Yi and Julie. Thank you. Have a nice day.
Thank you. Thank you again.
Thank you. Bye-bye.